All right, hey there. How are y'all doing? Chris Franks with Texas West Capital coming at you live here a few minutes after 11 a.m. Central Standard Time in Boerne, Texas, just north of San Antonio, man, dealing with this heat we've got over here. But apparently not just here. Our friends in the UK feeling like they're in Texas. I think they had it was their largest or their highest temperature ever or whatever the other day. I can't even think of what I'm trying to say here. Almost 106 degrees Fahrenheit. Yeah, I'm going to say Fahrenheit because I'm in the U.S., man. And, we go by Fahrenheit there, right? So anyway, hopefully you guys are doing all right out there, staying cool and whatnot. Man, all this Texas heat, especially here in Texas, because we've got, what do we have here? We have all these mining companies kind of coming into Texas, right? And so they've shut down a bit here lately a few different times because of the toll that the energy takes off the grid to help kind of make sure the grid doesn't go down. And so that has us dropping that mining hash rate there, dropping like a huge bit there. I do not know if anybody... I don't know if we're going to have the same issue that we had at the end of last week where I couldn't see any new comments. So hopefully we're not having that. Nope, I got somebody in there. Hey, look at that. Somebody from YouTube. All right, good. Abdel, good to see you checking in. Just want to make sure because we did have that issue last week where for whatever reason, a few minutes into the show, the comments just stopped flowing or stopped showing on our chat box there. So anyway, thank God it's coming in there. Chance, what's going on, man? Good to see you. So yeah, we've got that going on. We had that front-running lawsuit there with the SEC, Coinbase, and all that. SEC is saying that 9 of the tokens are securities. Coinbase is saying, no, it's not. But at the end of the day, guys, it pretty much is up to what the SEC says. The Constitution allows the government to create agencies like the SEC, which it then gives power for them to regulate as they see fit. The idea being that they know better than Congress what's going on. But at the end of the day, if agencies like the SEC or the IRS or whatever decide something and you don't agree with it, you can take them to court, and the court ruling will have more effect over it, right? So again, the SEC is going to go in. They're going to say that these are securities, and the only way that gets changed is if somebody challenges it in court. And the court decides, no, they're not securities. But other than that, what the SEC says goes, right? So it's the same way with all these government agencies. It's just how it works here. So it should be interesting, right? Esteban, good to see you. Michael checking in. Sarang, what's up, man? What do I think about the upcoming earnings reports and how it can affect crypto? Whose earnings reports? Who's in particular? We have a Coin, we've got Riot, we've got Maro. We've got these crypto stocks basically doing pretty well this week, rallying off that strong drop. I mean, geez, Coinbase coin opened up at like $425, somewhere like that. And it's dropped, around $100 or lower. It's dropped quite a bit since then. You guys remember when it first came out, we were looking at it and I talked about it hitting down there around 130 or lower, right? And so we've kind of been doing that. But, again, everything doesn't go down forever, doesn't go up forever unless it goes out, right? So, Luna ended up going out. But it doesn't go on forever, it just goes down until it's done, and then, that's it, right? Tell you, Ryder, what's up, man? Good to see you. Andrew is here as well. Coin hit 40 on the low? Yeah. So, remember, I was talking about 130 back when it was just opening up there for, 400, 425 in that area. So, it kind of went way on down there. So, a lot of stuff kind of coming up here. We've got the housing market. Again, we've been talking about that for a while. I've talked about the top of that. And, man, I'm seeing, just looking at some of these prices. Because, as you know, I'm looking in that Houston area, Lake Conroe, Lake Houston, the Woodlands, Tomball, that kind of area. Man, I just saw there was one property... just specifically that came out the other. I've been watching it for a bit. I think it was around 950,000 Just dropped 100,000 the other day. So, immediately dropped from 950 to 850. I'm seeing a lot of properties. If you look in that higher, so here in Texas, if you're looking at that, mid 100,000s to $1 million range there. I'm seeing properties come on in June, for say 700,000, and then 3 weeks later or 4 weeks later here into July, it's already dropped 50,000, something like that. Just crazy first time drops and whatnot. And it just kind of goes on to what's going on. Again, we've had interest rates that kind of plowed on high real quick. I think it was the fastest rise in at least 40 years, but I think it was like ever or something like that, where we went from like that 2% there in February up to like 6% there in April, May kind of area. But that's pulled back. We talked about earlier this month how the Fed was saying, hey, we're going to increase interest rates. But then like a week later, mortgage rates dropped, what was it, 0.5 or 0.75%? Just like that. And that's because, even though the Fed says it's raising here, those mortgagers are going, well, it looks like we've got a recession coming in. And so we need to work with that. The latest Fed meeting, they said that they're not going to do a 100 basis point rate hike. Again, guys, I've talked about the idea that they might start pulling back here into Q3, into Q4. So, September, October, maybe. So we'll see if that continues to follow through. I think it is. We've got a lot of fundamental indicators going on there, that we usually watch when it comes to the economy, really showing a lot of weakness and whatnot, which means interest rates should drop. Which means unemployment's going to go up. And as far as unemployment goes, again, guys, we've had everything that we've had over the last few months here where we've got companies that have stopped hiring. We've got companies that are like laying off quite a bit of people, right? They're rescinding offers that they put out, stuff like that. So, a lot of stuff going on here, guys, that isn't necessarily signaling that we're going to get new all-time highs with the stock market. So, I know there's a lot of big names out there who are saying it is, but I don't know, guys. We need to see a lot of work done before I buy into that. Can we get a bounce? Sure, we can get a bounce. But as far as the top not being in, I think the narrative is much clearer that it probably is. So we'll see how it continues to play out there, though, right? Dancer Eddie, what's up, man? Chris Baker, good to see you guys joining in. Andrew, you said you've been looking at Tennessee. Prices dropping there quite a bit. Yeah. Definitely seeing that happening, which for me is good because you guys know I was looking at the beginning of the year and was, kind of frustrated that I was buying at the top of the market, but haven't actually made a purchase yet. So it's working better for me. Not great, still near the tops, but definitely much better there, right? Andrew, I'll see if I can do that, man. I'll see if I can do that. So anyway, guys, hey, listen, join us here at howtotradetowin.com. We'd love to have you there. I've got, I was going to have one announcement next week, but now it's going to be two big announcements, two pretty, what I think are pretty exciting things. So you guys kind of join in and pay attention next week, and hopefully you'll be as excited about it as I am. As I've been mentioning, we just continue to grow and to do more and more things, and we're launching new things. So a lot of excitement out there. Some of it free, some of it paid. But even the pay side, it's usually pretty inexpensive for most of what we're doing there. But man, oh man, just lots of just trying to get overall everybody into a better mindset, a better idea of understanding how to trade. Every once in a while, we'll get somebody that comes in and then they'll leave, from TWC, and they'll be kind of frustrated because they never really bought in, right? So they never really kind of did what they should do. They didn't pay attention. Maybe they thought they were going to get something that they didn't. And then they go off and, and they badmouth and they talk. It is what it is, guys. There's not a whole lot we can do about that. But, I think the fact that, we retain so many people, not just from when we first, not just from the last few years, but from when we first launched. Most of our members have been around for years now. And I think that's a testament to what we do. So, you can't please everybody all the time. Trading... Oh, guys, trading, if you haven't figured it out yet, trading has most to do with your mindset and, how much true effort you really put into it. A lot of people say they put effort into it and they're really just half-assing their way through it. And then they want to complain and everything's everybody else's fault. Remember, we talk about this all the time. But it comes from a general mindset in life that they're a victim. So don't be a victim. Go out there, it doesn't mean you have to be with us, but I'm just saying in general. whether you believe you can or you can't, you are correct. So if you believe you're a victim in life, you're going to act like a victim. If you don't believe you're a victim, if you believe that you have control over your life, if you believe you can affect change, positive change in your life, you're going to have a lot better chance of being successful as a trader. If you don't believe you can, how do you think you can go in and trade and make money, right? Does that make sense, guys? Again, I'm not saying this so that, you have to come join us or anything silly like that. We'd love to have you here, but at the end of the day, guys, what I do here is this is real life, guys. This is what I'm talking about. Most of your trading success is going to come with how well you deal with what's going on in your head. It's not the markets, it's not Wall Street, it's not crypto whales and all that other silly nonsense that people who are victims to themselves believe that it is, okay? I mean, that's hard for people to swallow. It's really hard for people to swallow. But those few that do, they go on and have a chance of doing pretty great, right? We've got people who have gone through TWC. You guys know Scott. But we've got others who have gone on who are working at funds right now. I just heard from another one who had been with us a few years, and they got an offer to work as an Elliott Wave analyst for a really well-known company. They're not sure if they're going to take the offer yet, but man, it's exciting times, right? We got another one who just was offered an internship with Elliott Wave International, which is awesome because I love them folks over there. So yeah, I mean, is everybody else doing that? I mean, if they're not, then what's up, right? Just saying, guys, man. You got to get beyond sometimes what some people say, right? Hank, what's up, man? You coming into Lake Como? Let me see here. All right, so let's see. So that's it. Like I said, guys, you can join us here at howtotradetowin.com. We'd love to have you there, right? Let's kind of join in here and see where we're at right now. So with Bitcoin, there's a couple of ideas we've got floating around, right? Nothing's really changed. Right now, I've got this potentially as a 1-2, 1-2 here, and then 1-2 heading up. If so, wave 3 has a minimum expected target up here of the weekly S1 pivot. On Coinbase, that's right around 26,218.5, okay? So what we're looking for is a breakout higher here to kind of say, hey, we're headed up there. There's another possibility. If we get a breakdown below wave 2 here, I think I'm going to go to our alternate count, which suggests that maybe this is wave 1 here. And so this would be A, this would be B, and then we'd have a C lower, right? And if that's the case, then this would actually be wave B, this would be, or wave A, this would be wave B. And that gives us an initial, wave C equals wave A target of, right there around 21,824 here. Beyond that, let me kind of see. Let me kind of get my my fib tools in here. Oh my gosh, let me kind of larger time frame here, make it a little bit easier on me. Let's see here. So we have that 1-to-1 target there that I just gave you, and then so beyond that, we would have the 50% right here at 21,423. And then we've got, the 65 to 70.5 is right around the current 1 hour pivot. I think if we're bullish here, I don't think we drop below this pivot. Worst case scenario is we get to the pivot. So it just is a 1 and like a 2 down to the 70.5 and then up. But when we're trading pivots, guys, if we're bullish, and again, usually this move right here, this idea where we move in between the pivot and the R1, and we rally up through the R1, find support, right up through the R2, almost the R3, coming back, find support. I mean, the fact that we did not, come in, hit the R1 and retest or test the pivot as support, usually is pretty bullish and says we kind of, rally on up through. Now, again, there are no guarantees, and it's not always right. But, it's not always, right? Got to put those correct pauses in there. But, again, most of the time, that's kind of what happens there. So we'll look for that. if we're looking at the 1 hour, we're kind of, about just on the bearish side of neutral here with the Stochs RSI. RSI, we're kind of coming up to this support resistance level right here. It's kind of where we're at. As you can see here, you can go, gosh, I can just do this, guys. Just like that right there, right? So if we look at this area through here, see how it works as support resistance real well, coming all the way back. So, could see a rally up off that. What we've done here on the 1 hour is just pulled back to the R2 pivot. If we look at this looks like a leading diagonal here. 1, 2, 3, 4, 5. This right here looks like 1, 2, 3, 4, 5 right there. So what it would look like to me is maybe like a 1, 2, and then a 1, 2 is a flat. So A, B, C maybe. But we'll have to see some breakout and heading higher. That's just locally, guys. Really what we're looking for is, does it break out above the swing high here? If so, wave 3 up there, 26,218.5 minimum. If it does break down below wave 2, then again, initial target is the 1-to-1 right here at 21,824, and then, like I said, the 50%, and then that's 70.5 down there at the pivot. Excuse me, hiccups there. Our 4 hour here is just broken out of oversold. It wants to try and cross bearishly down here. We've got about another 3.5 hours though still. The current candle's just starting, so a lot can happen with that. As we're looking at this big picture here, guys, I mean, you should be paying attention to the fact that, we're moving up and finding, and pulling back to the previous area of support, right? So we've kind of moved up through here, and so we find a resistance right in this area, right? And we move up, and we pull back to this previous area here, right? And then we rallied up. We come back to this previous area, right? And then we're moving back up. So, this is kind of the thing you want to see if you're bullish. You want to see this where we're pulling back and catching bids there at the previous area resistance, and we keep pushing up. As I warned, a lot of times when Bitcoin first gets going off its lows, after we've had like a bear market low or something, we have this consistent push, right? And it wears people out because everybody continues to try and sell the rallies, and they keep getting caught, right? They keep selling it, and then it goes up higher, and then they sell it, and then it goes up higher. And that's what, happens a lot, especially here with Bitcoin. So, that's what I'm kind of watching as it continues to go through there, right? As it continues to rally up through there. Again, still looking for a nice move up through this inefficiency here, up toward ultimately that kind of the $29,000, $30,000 area just generally. That gets us up here into this cluster right here, right? So into this wave Y triangle kind of idea here. So that's where you should generally expect to kind of hit some resistance, right? So you have all this right here, all this sideways, this range right here, providing resistance. Breaks out into this triangle, sits right on top of it, and then that drop. So looking for a rally up into that at least. Now, that doesn't mean that the bottom's in, guys. If we're going to be honest, right, the same thing I keep talking about. This could be 3, this could be 4, a move on up here, and then you get a 5 on lower. But I think, if we're breaking out above this swing high up here, what is that, right around 32.3, oh my gosh, what is that right there? Around 32.383 or so. So basically 32,400. Breaking out through that, I think that all but guarantees that bottom's likely in as it does it there. But, again, we've got bullish market structure here off the lows, right? So this low deck here on 18th of June, so over a month ago, again, low, high, higher low, higher high, higher low, higher high. Potentially a higher low, but we need to break up for a higher high to mention that, but to get that. So, if you're trading, guys, it's all about the trend. What is the trend, right? No matter how you're trading, you should be trading in relation to that higher time frame trend. And so for over a month now, that trend has been up. Now, if that changes, okay, then you've got reason to be short. But I think for now, you continue to keep shorting these these rallies here, right? And you keep just getting run over. We found out that Tesla sold 75% of its Bitcoin holdings. Saylor says he didn't sell any, of course. We'll see. We'll find out. But, so that happened, right? I mean, it's huge. What was it, like $1 billion almost? 990 somewhat $1 million? We have the Three Arrows Capital nonsense, Celsius, all those guys, right? Voyager, all those. We had the Luna thing happen. So all this selling going into the market, and especially here lately, right? With all this Tesla and then Three Arrows and all that. And we found support. The market's just absorbing that, right? So I like that as a sign. I like that as a good sign right now. We'll see if we can get that continuation up further. But until we see anything different than what we're already seeing here, there's no reason to be looking for lower at the moment, guys. At the moment. I hope that makes sense. When I say things like this, a lot of times newer traders come in here and they'll be like, oh, you don't think of blah, 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 and nobody's actually really listening to what I'm saying. So hopefully you guys are. Never deal in absolutes and guarantees with trading, guys, okay? I'm going to be honest with you. You're going to lose your money if you do. There is nothing you can guarantee or there's nothing that's an absolute in trading other than if you fail to use risk management, you're not going to be in the market for long, okay? Nicholas, what's up, man? From Whistler, huh? Good to see you checking in. Let me see here. Who else is in? Blaze, what's up, buddy? Let's see here. Telluride says the 29 to 30K gets us to the next high volume node on the daily. Also, the D1R1, watching the DXY and the stocks, though, too. Yeah, DXY still continues to pull back. We'll look at that here in a minute as well. But, in general, remember, it's not because the dollar pulls back that things rally. It's just that the dollar itself is its own market, right? And so generally, if the dollar's pulling back, that generally means people are putting money into other things, riskier things. That gives us that risk on market, right? It doesn't mean a dollar taken away from the DXY is a dollar going into, I don't know, NASDAQ or something, right? Or into Apple or something like that. It just means that in general, people are not as concerned. If the dollar's rallying, it's because people are becoming more concerned and they're getting into the dollar, right? Rather than putting it into those riskier assets. So as the dollar pulls back, that takes a bit of pressure off riskier assets prices in general. And we often see that people are then kind of being a little bit more convinced to kind of get into them. And you see that rally. But the idea that, the DXY drops a point, so something has to rise a point immediately, that isn't the way it works, guys. We're talking about generalities here. Because there's so many other risk-on things you can put those dollars into, right? Yeah. But what you're looking for is a general trend. If the dollar is trending up, generally we expect riskier assets to trend down, right? Doesn't mean they happen right at the same time or, every exact move. But it means in general, that's what we're kind of looking for. So, yeah. Chris, what's up, man? You're also in Texas? It is hot, isn't it? Just got the June bill, and it's doubled the cost last year despite being same energy used. Yeah, you heard what they were saying there, right? So, ERCOT here has gone to, instead of a crisis management model, they've gone to this reserve kind of model. And so it costs us more. Yeah. I know, yeah, those energy prices are up just ridiculous here, in Texas for sure. Yeah. And I like it cool. I'll be honest, I like it cool. So I'll pay the prices on that too, man. It sucks. But hopefully that heat wave will kind of catch on down. I know people, it could be worse. We could be in the UK, right? Oh my gosh, I feel for them. They're really hot out there and, man, central air, from what I understand, isn't quite the thing it is here. Yeah. Let me see here. Sailor's paper hands will be exposed next week. We'll see, man. We'll see. I don't know. He's got a huge ego. I could see him holding on to death, basically. Holding on, and just absolutely being forced to do it before actually doing it. Remember, he was the big high flyer during the dot-com bubble, right? He was up there at the top. And he was one of the ones that crashed the hardest, right? He almost I mean, like 98 or 99% decline. And then he rallied back up. But as of 2015, his competitors were taking off. I've talked about that here. I've talked about it in depth there with Discord probably about a year ago. And the only reason that MicroStrategy ended up finally rallying in 2020, 2021 was because he started buying Bitcoin. It was at that point that it started rallying. Other than that, he's going flat, and all his competitors, Tableau and all that other stuff, are all just flying up since 2015. So, it is what it is, right? We'll see what happens. He's talked a lot. I don't know. At the end of the day, he could say, you know what? Who cares? Who cares what I said? That's what he could say. Who cares what he said? He's going to do whatever he's going to do. But I don't know. I think that ego's there. I think that he would be hard-pressed to actually sell. So we'll see. We'll see what goes on there. Question is, how are Bitcoiners going to feel if he does sell? Are they going to be like, screw him, who needs him anyway? Kind of like they're doing with Tesla now, right? They're saying, we don't need Musk. Are you going to do that with Saylor as well? Or are you going to be like, oh no, all hope is lost kind of thing? It's a lot of Bitcoin to be held by one entity. So it could put it could put downward pressure on price for a bit. But again, if the market is overall bullish, it'll be temporary. The pullback would be temporary, depending on how, for however much he dumped. And the market would absorb it, and then it would go up, right? That's just generally how markets work, guys. So yeah. What's going on, Mr. Wilkes? You say it's fine in the UK now? Just had 2 extremely hot days. Yeah, man. What was that, 105.7 or something like that? Again, I'm using Fahrenheit because I am not so well-versed in Celsius because we are in the U.S. over here. But, man, you guys stay safe over when it gets hot, right? Kajak Power, what's up, man? What do I expect for the ruble to the end of the year? Honestly, I haven't looked at the chart lately. I don't expect anything necessarily good to continue to come out of it. I think it rallied up high there, and we'll see it continue to drop off. As long as Russia's embroiled in this economic sanctions stuff because of its nonsense with Ukraine right now, I don't see any real light of day for the ruble. It has no reason to. It has every reason not to. We're looking at, basically you're looking at China for the most part having to absorb the oil and gas sales, right, from Russia. I mean, that's really where it's got to come from. And China's pulling back. China's, slowing down. So how are they going to help Russia with that, right? And then, of course, Russia, is doing, is going to decrease those rates. It shot up because it rose, it lifted the rates, the interest rates there. But, that's coming down. So there's no boost from that either, right? I mean, so Russia's just kind of really stuck right now. Based on this decision to, invade Ukraine. So, yeah, I don't really see it doing a whole lot of good for much. At least, once it's done, there's a lot of talk about Putin and, health issues. I think cancer, stage 4 cancer, something like that. Parkinson's, I don't even know. It's just all this other stuff, right? If it's true and he goes down, well, maybe they've got a chance of working out of it sooner rather than later. But, I just, while they're doing this whole thing with Ukraine, I don't see any good. Now, once all that's done with and whatnot, especially if Putin's out and some more moderate comes in, that maybe kind of gets out of the war and all that stuff, I think that would have a better chance of giving the ruble some room to run. And in that case, there might be a play there. But, you got to get all these sanctions out of there first, really. Right? Let me see here. Okay, so this is what we're kind of looking there. So, again, with Bitcoin here, kind of looking for this move to rally up. Again, if this bottom holds here, this wave 2 holds here, and we get this breakout above the swing high, we're looking at least a wave 3 up here at around 218. But really, ultimately, I'm looking for a move up into this high volume node, up into this area up here around 30,000. That's kind of where I'm looking at. Again, if we do break down below wave 2, you know, we can come on back down here, potentially as low as the 4-hour pivot. But I think that would, you know, potentially be just kind of where we would, I don't know. That's going to change here at the end of the week. You know, we're on Friday here, so the end of the day on Sunday, these 4-hour, 1-hour pivots going to change. But again, if we're pulling down, you know, below this high volume node here, dropping back down below the July open over here, I think that says, okay, probably an ABC here. We're done and we're heading lower. In that case, first stop right there around 15,000, 15,400. Well, I mean, if we go from here, where we're at right now, give us a target right there of around 14,367 or so from where we're at here. Again, the idea being that instead of this being 3, 4, and 5 here, this would be 3, this would be 4, and then we'd have 5 still to go. But as long as we continue to rally up here and, you know, make higher highs and higher lows, you know, our market structure, you know, will then still be bullish off that low there and head up. You know, this isn't hopium or anything like that. This just, you know, this is just the way. We've got higher lows and highs coming off that swing low there. You've had a lot of your big accounts out there, you know, you guys see them, that have been telling you that it wasn't going to go above, you know, this level up here, wasn't going to go above here, wasn't going to go above here, wasn't going to go above, you know, and they just keep telling you it's got to go down, it's got to go down, it's got to go down. And until the market shows you that it does go, you know, that it is going down, you've got to go with the trend. I mean, that's, guys, you got to understand, trade in the direction of the trend. Stop trying to trade every move along the way. Whatever time frame you're on, trade in the direction of the trend, and then keep an idea of what that larger trend is as well. I mean, if I can give you one bit of advice other than proper risk management, guys, it is to just trade the direction of the trend. All right? So if you're looking at this 4-hour trend, right, or the daily trend, I mean, we're up off for over a month now, right? That trend is up. So you're trading in that. If you're zooming out to a weekly or a monthly or something like that, well, then the trend is down from that 69,000 swing high, right? So all you want to do is short in that case. But you don't want to just short every time price pushes up higher. You know, you've got to be smart about where you're looking to short. But then once that market structure and that larger time frame breaks, if it does, you know, and you're going up, then you want to just be longing. You don't want to be trying to mess all the other way. That's how everybody gets caught, trying to trade the corrections. Okay? Let me see here. What odds do you put in a melt-up scenario? I don't do odds. So you guys asked this, and what you're looking for is all you're going to get is somebody's gut feeling, and gut feelings aren't worth squat, guys, okay? Nobody's actually saying, when you say odds, somebody should be looking at statistical analysis, right? And giving you like legit odds. But usually when you're asking for, all you're going to get is a gut feeling, and gut feelings don't matter worth a flip, guys. Okay? If you say melt up, I think you're probably talking about stocks. And, you know, the possibilities there, I don't think it's going to happen. Again, the count on the way down, we'll look at it here in a minute, you know, looks pretty down. I mean, it looks pretty significantly down. We've been down for, you know, 7 months. Well, it depends on what you're looking at. You know, the NASDAQ topped out there in November of last year, and then the Dow and the S&P topped out at in January of this year. So, yeah. Let me see here. So, that's what we're kind of looking for here. You know, if we get that breakout, we should be rallying up there. If we get the breakdown here, well, then we've got those couple of targets we talked about. If we're breaking down, you know, well down below here, well, then we're probably looking to that lower target we just talked about. As I've continued to say, if you've been paying attention, you've heard, right, that it is possible, while we're looking for this to be a 3 and a 4 and then a 5 still to go, it is possible that wave 5 is complete here. That this was 3, this was 4, and this was 5. We just have to count this a little differently. But again, right now for this bottom here, it's a solid wave 4. You know, 3 up here, 4 down here, solid wave 4. And so we're going to look at that higher until it tells us it's not anymore. It says, again, it has nothing to do with hopium or wants or whatever. It's just, here's where the market is, here's where the count is. Until that count's invalidated, you know, we'll keep watching that count, right? I see too many people, they get excited about something they think. Never mind. I'm not going to say that. So anyway, we'll continue to look up here. As you can see right now, we're kind of hitting this this resistance right here at the daily pivot. We're looking for a nice impulsive breakout above that. We are getting toward the end of the month, so this pivot will drop probably down toward this 21.6 area, maybe 21.5, maybe around that area, I think. Probably get down even, I'll say 21 to 21.5 just to eyeball it here. Probably had that drop down. But we definitely would be looking for a rally up into the R1 if we can get an impulsive breakout above that swing high now. We're just getting caught by what was there. So again, not a whole lot of volume going on. You see how the volume stops right here? You see how it shrinks off right above it? No interest in this area. Interest starts kicking in around 28,000 or so. Really kicks in up here at 29 to, to 30. So, just everything else aside, if you're not into Elliott wave and all that, I mean, this is what we can watch, right? We can use our pivots as important areas of support and resistance, and then we can look at the VPVR over there and see where is the market actually interested in, and it's not in this area here. It's not until you're getting up here. So again, breaking out above here, I think we're getting a strong move on up into this high volume node up here. And, if that case, I'm looking for 5 waves up into that. If that happens, I'm looking for 5 waves up because that'll give us a wave 1 up. We'll get a 2 on the pullback, and then we'll get 3 on the breakout above this area. And so, as I continue to talk about, wave 3s are usually where you get your big resistance breakouts. But generally, if you're coming up through under the pivot here, you rally up to the R1 area, and that's 5 waves, 3 waves back to your pivot, and then which is usually around the 38.2 to 50% retracement, 38.2 to 50%, and then you kind of pop on out for wave 3 higher. So, no reason to really kind of worry about anything else as far as what's going on with there. Be careful, guys. I get a lot of questions about, oh, this is happening and that is happening, and you've got people who have no real experience understanding fundamentals or how they work or what they mean, trying to attach them to a narrative that they've heard somewhere that seems to make sense to them, right? Of why price must go up or down. Don't do that. Stop looking for narratives. That's why I always encourage people, don't worry about going for fundamentals. Go for the charts. Look at the charts. It's easy to learn how to read the charts. It's a lot more difficult, first of all, to understand how to read the fundamentals, your SEC reports, your EB, your accounting reports, all that kind of stuff. And then from there, it's even more difficult to figure out what does that really mean, not just in general for the company, but in general the company in relation to what's going on with the economy at that time. So for most people, it is best just to learn how to trade the charts, and don't worry about the narrative there. Because remember, in the market, guys, you're dealing with asymmetric information, right? In other words, you're going to know very little about what's really going, very little of the information that's really going around, right? The bigger players, the ones in the know, your hedge funds, your people in the company, whatever it be, they have a lot more information about what's going on. So not only do you not understand how to really use that information, and don't take offense to it. I'm just being honest with you guys, right? It is what it is. Part of being a trader is being humble and understanding that you probably don't know things that you don't know, right? But not only do you not really understand how to use that, but then you don't have the information. You have very little of it. So, those narratives that you look for, that often are, you may not be aware, they're often where you're trying to make whatever you think needs to happen seem legit in your own mind. Confirmation bias is what you're looking for. Most of the time, if you haven't noticed it yet, guys, that comes out false, right? And you end up going the wrong way in the trade, right? Yeah, again, it just has a lot to do with the whole asymmetry. I can't even say it. The idea that information is asymmetric in the market, okay? So use the charts. Learn to use the charts. The charts will tell you what's going on if you learn to use them properly. And that's a heck of a lot easier and quicker than trying to learn how and understand how fundamentals work and then actually getting good at it. Okay? I hope that makes sense, guys. I've been talking about this lately. just because of a lot of the questions I get. But yeah, you want to make sure that you're paying attention there with that. Do I think we're on a wave 1 or wave 3 of stocks then? If it's like '08, then we're on wave 3, and wave 5 would be a 50%. Oh, I think, no, I think if the top's in, we're going to do a lot worse than '08. '08 was just a recession. We've got 200 and somewhat years of market stuff to undo, really. I think, again, if we're coming down, I think we're still saying I've been talking about the last few years. I think we're looking at a depression probably. Much worse, much worse than '08. And it's not just how much it goes down, but it's also, does it go sideways, right? Again, I talk about, to put this in perspective, I wasn't even alive back in the late 1920s or early 1930s. But, it took 3 years for the stock market to hit from its all-time high to hit to low, right? And then it took almost a quarter of a century, 25 years there, to make a new all-time high. And so this would actually be a bigger depression, so would likely be in it longer, a lot more sideways. And so, again, as I've been talking about, I think we get deflation down, and then we come up into stagflation, and then, that's got to work itself out over probably decades. So, yeah. Yeah, it was crazy how fast it happened. Yeah, so we've had, but then we had the faster drop in March of 2020, right? But then we also had a fast drop there in 1987. Black Monday in October of 1987. So, it's not weird that it comes out there. I just think it has a lot more to do with how leveraged things are. Again, just think of how quickly Three Arrows Capital went down, right? How quickly Celsius and Voyager and all them went down, BlockFi and all them, right? Because of how leveraged they were. The harder your leverage, the stronger you're going to go up, but the stronger you're going to come down as well, right? So, yeah. I think, again, I think if the top is legit in, I think we've got something a lot worse than '08 coming in. But it's nothing different that I haven't said over the past, few years. So we'll, it's playing out right now. We'll see if it continues on, right? So there we go with Bitcoin. This is something else. This is another chart that I gave to our Discord members probably a week, maybe a week or more ago originally. And I mentioned right here that we had the blue line here crossing over this red line, the red line crossing down under it. And then we found support here on that blue line. And then I said that often a signal that price will rally through the cloud. And sure enough, it rallied up into it, pulled back, pushed up into it, came back. It's found support on the cloud there, looking for a rally up through the cloud. And then I'll let you know here that the blue descending line here is the 200 MA on this is the 12-hour chart here. This is pretty clean right now. This whole movement right here where you get the cross, rally up, you find support on it, you get large expansion of volume, large candle spreads off that support into the cloud, pull back, retest the cloud support as support. And so now we just look for that breakout higher. Initial target, by the cloud here would be the breakout of this 25,000 area here, that flat. And again, usually when you've got these flat areas, they work as support. So, the idea would break out, came back, uses support, and then break out. And secondary targets up here, this flat area up here at around almost 29,000 up here. You kind of got that flat area and then that flat area. But again, that gets you right up here depending on how long this takes you to get down there. But yeah, usually if you're trading the cloud, and you get this strong bit of movement like this through this, you're looking for initial target right here, and then it breaks out, comes back, finds that area there as support, and then it continues up to this next area here. So yeah, we'll see how that plays out there. We'll see if we can get it. Marcel, what's up? Says fastest drop was in the 2011 flash crash, isn't it? I'd have to go check on that, honestly. I don't know off the top of my head. But we've had, again, in this modern age of money, in the 70s, we went off the gold standard. And then I've shown you guys charts over the last year from the St. Louis Fed, right, Fred? Where we've shown you how that increase in leverage has occurred since then and how significant it's increased. And we've shown how the churn in dollars, the velocity basically in dollars, has decreased over the last 20 somewhat years now. So you've got more money being printed, and the churn continues to drop off, right? Or the use of it, right? But again, we're just looking here at stateside. We're not looking at euro dollars or anything like that. Remember, guys, the reason why euro dollars are so important is because if the money is within the U.S. borders, then the Fed controls it, right? So the Fed controls how the banks can create those loans, right? They determine what kind of reserves that the banks have to have and whatnot, and how they can do that fractional reserve banking, right? But once the dollar leaves the U.S. borders and goes overseas, again, it's called the euro dollar because when it first was doing this, the Eurozone was, the Europe there was the Eurozone. Europe was where it was 90 somewhat percent of it was held, right? Now it's everywhere in the world. But once you're over there, all of a sudden those banks over there can create their own dollars, right? Based on their own fractional reserve banking going on over there. So the Fed has no control over that. Again, there's a lot more than just what's going on in the U.S. here to determine what's going on with the dollar, guys, okay? This cloud right here, this is actually something one of our members had a script that they had put together. You can find it. You can type in Leo Ichi, Leo space ICHI. The great thing about his what he's done here is when you go to inputs, he's got it set for traditional, crypto signal, crypto double, crypto triple, 24/7, and then it's how quickly it reacts, right? It's how sensitive it is. So usually for things outside of crypto, we use traditional, right? Those are the usual settings that you get with the cloud when you first put it on. Crypto double has then its own settings in there. And so as you can see, this is just the script itself here. But yeah, so I don't remember. It's been so long since I've done this. I don't remember what it is, what the settings were. But if you get this script here, if you go up here to your indicators and you type in Leo space Ichi, you can bring it up there and then you can use it. Just make sure you aren't looking at the crypto double on your stocks or, whatnot, right? Anyway, so yeah, again, different things we're looking at there. What else do we have here? We've got futures here, which is trying to break out again through the range. This is the weekly. You can see we've broken out of oversold here on Stochx RSI this week. We've broken out of oversold here in RSI itself as well this week. What do we got here? Again, nice big moves out here. Looks like, yeah, see that breakout right up to, what is that? That is around the 50% retracement so far of this, just about, of this breakdown. If we kind of go off this swing high up here to the low, right there at the 50%, finding support at the 38.2 right now. So looking for a breakout higher. Remember, you do have this gap here, this daily gap on from 13th of June on the futures, but that is just a weekend gap. So again, I don't give it as much significance as as a breakout gap or something like that. You have this other one up here from May 9th, again another weekend gap here. But if you're the type that believes all these gaps have to get filled, well, then you're probably looking for price to rally on up here to at least 35,925, right? And like I said, if we're getting up there, that takes us above this area, and I think that really kind of gives a real strong idea that we're probably bottomed out here and heading up, right? What is the Bitcoin target based on the chart by the end of the year? I don't do time. Time's going to lose you a lot of money. I wouldn't worry about it. I worry about levels. So if the bottom is in here, and if it's wave 4, then on Bitcoin, spot Bitcoin, you're looking at probably around 98 to 100,000, 102,000. as our normal wave 5 target. But, if we're doing what we always do with Bitcoin, then you should expect a strong surge up there at the end. And, I don't see any reason why I can't hit, above 150, 200 even, in that scenario, if that were to happen. Now, remember, the other thing I've talked about, guys, and this one's always kind of crazy, and I'm definitely not saying this is what is happening, but, what if this is just 1 and this is 2 of 5, right? So now we have 3, 4, 5 still to go of 5. And in that case, you should see it rallying well above 400,000. Until that happens, though, until we're getting signs that's probably it, still going to look at this as possibly a wave 5 going higher, but we've got to get above the swing high to say it's wave 5. Otherwise, that could be wave 5, and this is the first bit down, right, of a really long kind of bear market. But the idea that we are just now entering a bear market on this drop here is silly. This whole sideways would be part of that bear market. This whole sideways for a year plus, right? So it didn't just start right here. That's like saying the bear market didn't start till this right here, right? We had the drop off the all-time high there, right? Different structure, but the fact that we went sideways and dropped lower means, that the bear market would have started back over here, right? This is just that last kind of grasp at the top there and then comes down. So yeah, we're not just starting crypto winter, been in it since, what was this over here? This is the week of the 12th of April of 2021. So was that 15 months or so? Yeah. Victor, what's up, man? Miners, are you talking about crypto or are you talking about gold miners? Looking, what'd you say? Looking attractive with this morning's pullback? Yeah, again, coin looking good coming off the lows there. Man, oh man. What's it called? Riot's really rallied up well off the lows. Sure. But Riot had a big drop from, 100 plus down to like single digits, right? So they've had a big drop. So, of course they're going to rally real well off it. I'm out there. Voyager did that big wrap, off the lows. Everybody's kind of upset about that. But, again, they go into bankruptcy. Bankruptcy protection means they can restructure, reorganize, come out a stronger company. And that's why people buy it at the lows like that. So, yeah. Let me see here. Let me kind of catch up with what we're looking at here. Let me see. Bear USDT, this is what we've been watching. Remember, if we look at Bear USDT here, or USD, it's that 3x short Bitcoin token, USDT on FTX here. Coming down off the top here, this looks like 5, and this looks like 3 right here. So if this is an ABC, we should expect it to drop on down, right? So the only way we confirm that as an ABC is if we drop down below wave B here. But right now we're looking at it as such, and we're getting this drop down here. Remember, I talked about looking for at least a target of the S1 here on the daily, which is right around 565? 14,565. And potentially as low as this high volume node down here at around 10,280. Right? You can see here that the RSI still has room to fall to get into oversold. Stoch RSI is oversold, but RSI still has room to continue to fall there. So, I've got here the comparison with Bitcoin here, just in case you didn't think that, that it makes much sense or it's anything. Again, Bitcoin's doing the opposite of what's going on here, right? We can look at Ethereum, which has popped up, over 50% off the lows, I think. So, generally these things tend to work together, right? Ethereum and Bitcoin tend to kind of go together. And so we should, generally expect Bitcoin to continue up with Ethereum. So, just other ways of looking at the charts and looking at what's going on that kind of say, okay, well, there's a lot of things happening right now that suggest that a bottom is potentially in, or at least some kind of bounce up into that, that 28, 29, 30 area. So that's what we're looking with there, right? Oh, Ethereum's up almost 100% now? Yeah. It was 50%, I guess, was recently, not too long ago. Yeah. No, I didn't do the E-minis yet. No. Let me kind of check in here. So that's Bitcoin there. Let me see here. This is the big daily Bitcoin chart, point and figure. Let's kind of change this a little bit here. Oops. Meant to throw that on ATR. They're not traditional. This platform is stockcharts.com, guys. It does a great point and figure. Better than Coinbase. Better than TradingView. Because TradingView still keeps time in there, and point and figure is not about time. It's about price movement. And so looks like we've got this this base here, which should rally on up. And if it is, that gives us, you know, based on this down here, gives us a target of about 27,666 to around 31,600 or so. $3,000, $4,000 range, but that's what point and figure is. It's about ranges, right? Nonetheless, the idea is it takes you up into this area right here. So, you know, based on the point and figure here, it says that we should potentially be running into this kind of cluster up here as well. So that just kind of, you know, continues to go on with the other things we're looking at as far as are we going to rally higher, right? Let me see here. The dollar. So this is the big index, the dollar futures here, right? And so we've got this move up, talking about the possibility that wave 3 or 5 maybe even be done up here. And so, you know, in either case, we're looking for some, you know, probably a few months of pullback, right? Especially, you know, if it's only wave 3, at least a month or two of pullback. If it's wave 5, multiple months of pullback. And so how can Bitcoin continue going up if the dollars continue going up? Because maybe the dollar's topped out for now, potentially. Yeah. So again, nothing I haven't talked about already, but you can see that we broke out here on the daily above that R2, about halfway up to the R3, broke back down, trying to find some support on the R1, looking heavy though. Stochh RSI just now dipping into oversold. RSI has a long way to go. It's just, you know, currently finding some support right around this previous area of support or resistance. We're right around mid-range there, right? So we break down below that. We usually expect it to continue on down into oversold. So looking like, you know, the dollar may be topped out a bit, which gives everything else, like I said, room to breathe, right? Let me see here. So with that in mind, let's find what we're looking at. Let's look at the NASDAQ here real quick, right? Oh, let me find my chart here. All right. So the 1 hour, so again, my big count, in case you guys haven't seen it or you've forgotten, coming off that first week of January high there, I've got basically a 1, 2, 1, 2, and then 1, 2, looking at 3, 4, 5 of, you know, 3 heading down, right? So what do I need? I need to see a breakdown below this swingless wave B triangle support right here at 11,322.84. If we get a breakdown below that, that suggests that wave 2 is complete here and we're heading lower, right? Again, it'd be a series of 1-2s, which means the drop would be pretty significant. It's at that point that everybody goes, oh crap, it's going the other way. It's not going to bounce and head higher. New all-time highs like I thought it was. The other possibilities I've continued to talk about, if we can get a breakout above this swing high right here, this 12,154.38, that'll suggest that this is maybe a 1, 2, 3, 4, 5 as a leading diagonal. Or, I guess it doesn't even have to be a leading diagonal, does it? Yeah, it doesn't even overlap there. But as a wave 1 down, and then we'd have wave 2 up, probably up here toward this 14.5 area. And then we'd get the big wave 3 of 3. If we get this, you'll see a lot of confidence, a lot of back padding, all this kind of stuff going on, especially with your big time CNBC commentators and whatnot. But it's only after the rejection and then the drop down below the swing low that everybody again says, oh crap, it's going down. I'm in the wrong way. whole bunch of short covering, a whole bunch of shorts or long covers there, a whole bunch of people shorting, trying to get down there, right? And so you would have that big move down below that swing low there. It's the same thing whether you're looking at this one or you're looking at the other two, the S&P E-minis and the Dow. But again, guys, remember the differences. All these indexes are not created the same. Remember, NASDAQ is extremely tech heavy. So if tech is doing good, it's going to do good. If tech is not doing good, it is not going to do good. If you get to the S&P, it's still decently tech heavy, but nowhere near as much as NASDAQ. And then if you go to the Dow is much more well-rounded, much more diverse, much more broad-based. And so you can see one doing one and the other doing another. And that's where we often look for those confirmations of what may be going on and whatnot. It looks like we're getting a pretty good rejection here at my 70.5 target for wave 2. Dropping down below 3922.25 is going to hint that wave 2 may be complete. We definitely want to see a breakdown through this swing low over here at what was that, 38.20 and 25 cents. That'll be the first real big clue that that's in, and then breaking down below wave B here at 3723.75 should leave little doubt that price is down, heading down in that the E-minis are heading down in wave parentheses 3, right? But again, same idea here, more or less, as the NASDAQ. This is a leading diagonal, if it is, right? So it'd be 1, 2, 3, 4, 5. So instead of breaking down, if we break out above this swing high up here at 4202.25, that's going to suggest this is a leading diagonal is 1, 2, 3, 4, 5. And we'll get an ABC up, probably up here toward around, well, at least 4432, potentially higher up here at around 4600. And then again, the same thing. It'd be that rejection that sends it below here, and that becomes a 1, a 2, and then a 3. And that third wave is where everybody gets involved, and you get the big move down, right? Let me see here. Have I ever looked into California pension crisis when developing scenarios? No, again, I don't usually try to derive narratives from what's going on daily with something, with daily news. I tend to look at the charts, and then the narratives become, a bit more clear. If you guys have been following me, again, I've been doing this here on YouTube for about 4 years or something, since February 2018. Had the first bit of it wiped when YouTube removed my channel. Idiots. But we've got everything else up since. And but if you've been following me since then, I've been all but spot on with the Fed interest rates. Always kind of giving you, again, what they're doing versus what they're saying. And that kind of leads a lot into everything else, right? So I look at the charts and what's going on there. And then I figure, okay, well, what's the narrative likely to be? What are people, going to figure out as they do it instead of the other way around? Again, I think people tend to take the fundamentals and create a narrative and then try to make the chart work that way. I look at the chart first, then look at what's going on with things, and then figure out what that narrative may be. And it works really well doing it that way. Because again, the way that I look at the charts is the idea that things happen, right? The people feel a certain way, and that determines whether they're buying or selling. So the charts are representative of what that social mood is, right? Not the other way around. Even most big traders, guys, they tend to look at the charts and then they say, oh, well, people are going to buy or sell based on the chart. And they might short-term knee-jerk reactions, right? But at the end of the day, the way that the market is moving is based on what are people feeling, right? If people are feeling good, the stock market's going to go higher. If people are starting to not feel so good, the stock market's going to go lower, right? They're not going to buy as much. If they become concerned about what's going on, if they don't like their government, all these things, right? Yeah, so the charts, I think, are much more indicative of what people are feeling rather than telling us what people are going to do afterward. So, yeah. Let me see here. So, yeah, again, same idea here with the E-minis, the S&P. By the way, guys, are you trading futures yet? I've been trying to convince you guys to do that rather than just basic stocks, right? Because here in the U.S., again, you have the pattern day trader rule. If you don't know that and you're trading stocks, you better get to finding out. But that does not apply to options and futures. You can trade as much options and futures as you want, regardless of the size of your account. Pattern day trader rule says, well, you'll figure it out. You'll see it, right? You'll go look it up right now, right? You have to have a specific amount in your account. Otherwise, you can only trade so much, right? So often. But, again, what I just showed you, the E-minis there, that is the most liquid futures market in the world. So there's no reason you shouldn't be trading that. And, with futures and options, you can get a lot better return on your money, than just trading regular stocks themselves and looking for the meme stock to go up or whatever. So, again, here we are, same thing. We've basically filled in this gap over here, this June 10th gap, not a weekend gap here. Pretty much filled that in this rally here. We could still pop up a bit higher toward this daily pivot. But a breakdown below, this is the Dow, by the way, breakdown below 31,534.08 will hint that wave circle 2 there is complete. Breaking down through wave B here at 3143.93. It's going to add confidence to the count, and in that case say, hey, wave 3 is likely in progress down here toward a minimum expected target of 26,438.5. But like the other ones, it could still potentially be idea of this leading diagonal, right? And so 1, 2, 3, 4, 5. So if we're breaking out above this swing high up here around 33,272 or so, that's going to suggest that's likely a wave 1. Wave 2 probably coming up here. I'm just trying to eyeball it here. Probably at least 34,858. Potentially on up here to around 35,640. 1, 2. The reversal, this rally up. Everybody be like, oh yeah, see, I told you it was just a temporary thing, a pullback. We're going to new all-time highs, blah, blah, blah. That's always what that wave 1 to wave 2 kind of psychology is. And then when it drops down to a new low below this, then they go, oh boy, I was wrong. Again, and that's why wave 3s get so big. Because now you're making a new low after you were so sure it was going to continue in the original trend direction. And now it's going the other way, and you're like, oh crud, I got to jump on that. Got to get out of my positions. I was wrong. So yeah. Let's see here. Let's see. Yeah. So anyway, that's kind of what we're looking there, as far as all that goes. If we jump on here with oil, let me get my oil chart here for you. So oil, we've got kind of this sideways going on here, but it looks like we're going to continue down lower. If we drop down through 92.88, that'll signal that wave parentheses 3 is in progress to a minimum expected target of 76.57. Larger degree, the slightly larger degree, circle 3, minimum target down there around 74.68. Again, for oil, 1, 2, heading down, right? 3 has a minimum expected target down here of about 62.25. This 1, 2, 3. Again, if oil is topped out up here, which I think it probably is, then, I think we're probably headed down into the 30s. Same thing I've been talking about, right? Y'all might remember I was talking about oil back before the May 2020 crash. You guys remember that May 2020 crash? First time it ever went negative, right here. April. May contracts, whatever. Or April contracts that ended there in May is what I'm talking about. Yeah. But yeah, so, we were looking, man, everybody was off. I was looking for $3, $3.20 maybe, coming down from, I think we were around 50 or so. Yeah, we were up here. Link for that moved down to around $3. And that thing just busted down below zero, and that was just crazy. But, again, we've had now, 2 years and 3 months, so about 27 months of rally up there, right? it should probably come on down and pull back. I mean, that's a long way up with any real pullbacks. So I've got 5 waves up through that. We do have an all-time high there from the 11th of July, 2008 at 147 and 27 cents. If we do happen to break out above the swing high, that'll suggest that this is wave 4 and we've got wave 5 to go, you know, and that'll get us there above that all-time high. Let's say this is an A and a B and a C here. See, and this would have to be 1, 2, 3, 4. We'd have to come down a little bit lower for 5, maybe targeting kind of this 85 area at this previous area of resistance. So, you know, coming down as a flat, right? So ABC, ABC, and then 1, 2, 3, 4, 5 probably. But in that case, that would give us a wave 5 target around 171 or so, if it was to happen. But for right now, again, you know, looking for the move off the top here. We've got a high, we've got a low, we've got a lower high, we've got a lower low. So bearish market structure off this March 2022 swing high up there. So trade in direction of the trend, right? Short it. Don't worry about long it along the way. Just short it on the way down. Find your opportunities to short. Let me see here. So that's what I've got kind of with oil. What do we got here? Natural gas. Natural gas, I think, maybe just about topped out finally, or topped out. Let's kind of catch this here. There we go. So we got the move up here toward this area I was looking for. I had it at 8.323 kind of target area. So now we're looking for the breakdown. I can get that up there. There we go. So it hit my target there, and now I want to see a breakdown here. If we can get a breakdown below this, let me see here. Below this swing low right here at 7.606, I think it's probably going to say that the top's in and we're heading down. But, you know, your big areas of attention, you know, your wave 4 triangle support at 7.183, that's going to add some local confidence to that. Breaking down below wave circle B here at 6.014 should indicate at that point it's 3 waves up. Should say that wave C is in progress. You know, headed down. She's 1-to-1. Wave C will equal wave A. Right there around $4. So at least looking toward that area. If you're looking at gold, right? Let me see here. Gold has kind of rallied up to my target up here. I had an initial target of the R1 pivot, secondary target of this blue supply structure up here. Let's see. It looks like 1, 2, 3, 4, 1, 2, 3, 4, 5. I mean, it looks like we're probably done. Breaking down below wave B here at 17.11 and 70 cents. Should signal that wave 5's in progress. Wave parentheses 5. Wave parentheses Roman numeral 5. That would give us a minimum expected target of 1642.30. For wave 5. Where's my wave 5? There it is. If, let me see here. Yeah. So that's what we'd be looking for that. Big picture. Double top. Potentially. Just need to break down below this swing low right here at about 1673 and 30 cents. If we break down through that, that gives us a target down there of, God, what was that, 1300s there? I think I've got it on here. There we go, this target right here. around $1,340. Takes you right into the high volume node here. If you lose that high volume node and get below it, odds are we're going down to probably down here around this 850, 900 area. And this just becomes a big flat right there. That's the theory I've been working on since 2018, is the idea that we get a flat here and head back down toward there. So I've been talking about that, I guess, now for, what is that, 5 years? So 4 years? So we'll see if we can get that. We rallied up at that point, gave the rally target up here toward the swing high. We got that, and then, of course, looking for that breakdown lower. It doesn't have to happen that way. As always, guys, there are no guarantees, but for right now, why does gold have any reason to go up? Right? The dollar's rallied so strong, there's no reason to get into gold, right? If you believe that is a narrative. I don't happen to think the whole store value, whatever, blah, blah, blah. I think gold is just a tradable asset, just like anything else. So I don't get held back by all those narratives that keep me from seeing things like this possibly happening. Yeah. Let's see here. But yeah, so, again, kind of what we're looking at there. And, along with that, silver's kind of the same idea, right? Silver's the same idea that we've got this move down, especially if gold's heading down there toward 800 or 900. Silver should be heading down, below 800, right? Locally, I've got a couple of different counts here, potential, maybe 3, 4, and then as a 1, 2, and heading lower, or this is 3, 4, and then 1, 2, 3, 4, working on 5 of parentheses 5, circle 3 over here. Big picture, though. Again, remember when everybody was screaming to you that the meme guys were going to squeeze it up and everything? And I was talking about how this looks like distribution in this area here, especially because of this huge influx of selling that came right at the top. And so we've, that was back in 2021, right? And so here we are down lower, right? Everybody thought it was going to go up higher here. I was talking lower. We were right around $26, and even up here at $30, talking about lower, right? We're almost half that right now. Again, for me, it looks like A, B, and we've got a C coming down. So A, B, C. And again, that'll get us down there below 10 at least, but I think probably below 8 on that. Yeah, you've got, it's interesting, you've got two different, depending on how you read the chart, you got two different groups out there. Some say silver follows gold, others say gold follows silver. Either case, they both generally do the same thing, more or less, right? And so, if we look here, so right around 2011, which is when gold topped out, silver topped out. Now, gold rallied all the way back up here and made a new high, right? Silver did not. Silver did not confirm that high. So, again, when you're looking at things like this, and you have indexes that should be moving together and whatnot, or in this case, these precious metals, right? And they don't confirm, they don't both do the same thing. Usually that's an indication that, in this case, that gold is topped out there, that it should continue back lower. Because silver did not confirm that breakout. It didn't go up with it. So it's the same way we use the indexes when we're looking at NASDAQ versus the Dow, or the Dow versus the Dow transports, right? Dow theory, Dow versus Dow transports. If they're both not making new all-time highs, if the Dow's making a new all-time high and the Dow transports are coming lower instead, most likely the Dow is going to turn back down. Because it's not supporting, the Dow transports are not supporting what the Dow is doing, right? If you think about it fundamentally, the stock market should be going up because people believe that the economy is doing well. Well, if Dow transports are down, if your transporters are not making money, that's because they're not being used, right? Not being used as well. And so if they're not being used as well, that means the economy isn't as hot as it was, right? So they're pulling back. So the economy should feel that. So the stock market itself should feel that as well. So yeah. So that's what I'm kind of looking at there, guys. Again, nothing's changed. Everything's still looking at everything we've been looking at, how we've been looking at it. You know, we'll continue to see, do we get this rally up here? I think, I think there's a good reason to think that Bitcoin could be bottom, but of course we still need to see that breakout higher and continuing higher, right? We can't guarantee it's bottomed until we get a breakout above the all-time high, right? So up until that point, it's still possible that could be the all-time high, and we're just kind of heading lower. Unless we've got a pretty clear 3 waves down, which is what appears right now. We break up above that second wave. In that case, we'd have to break out above this swing high up here at 48,240. So this looks like, you know, a WXY, ABC, ABC, ABC here. So if it is and we break out above wave X, then that should say, hey, we're going to a new all-time high. But that's, you know, that's a long way to get up from where we're at. So locally, we look for a breakout locally up toward that 2930 area. We'll look for a pullback, and then we'll look for a breakout above this cluster to kind of take us on up here into this mid-40s area, lower to mid-40s. And then the breakout above that takes us above here, and then we really start looking good. Then we're looking to make sure we've got 5 waves that terminate around the swing high here, coming up off the bottom. We'll get 5 up, 3 back. And so most likely it'd be 5 up into this area, 3 back into this area, and then that would be a 1 and a 2, and then 3 up. So, yeah. Okay? So I've got to go. It's already 12:30, guys. Andrew, ask for that over there in Discord, buddy. Sorry I couldn't get it done on here. Ask for it in Discord, and I'll, in the chart request channel. And then I'll put it over there and tag you in it in the requested charts channel. Okay? All right. Hey, listen, guys. I appreciate you all joining in. You know, the odds are most of you aren't going to give me a whole lot of thought and aren't going to really believe anything I'm saying, and that's fine. It is what it is. I just hope that you're at least paying attention and understanding that it's not just something that I'm pulling on my rear end, right? There's a lot of thought and consideration in what we're thinking here and why, and I go through a lot of effort to kind of explain that to you. So that way, you know, again, because what I've done has really done well for me over the years. And so, yeah, I kind of believe in it. But you don't have to, but hopefully you're at least listening and maybe picking up things along the way that do make sense to you. Okay? Other than that, you know, join us at How to Trade to Win. We'd love to have you there. I've got 2 huge announcements next week, which I'm pretty excited about. Hopefully you guys will find them exciting as well. Other than that, guys, just trade safe. Be sure you're taking time off from the charts. You can't sit there in front of them 24/7 and expect to do well. You're going to get all that stress built up in the back of your head, and it's going to make you take really emotional choices, decisions and whatnot, trades. Everybody loses money making emotional trades, okay? As always, remember the only thing you control in the market is how much you lose, guys. That's it, okay? So just whatever you're doing, however you look at the market, make sure that first and foremost, the most important thing, the thing that you are doing consistently is proper risk management. If you can do that, you've got a chance at remaining in until you get good with stocks and understanding the market and everything. If you don't, you're going to be out like everybody else, okay? Like Hank says, go travel and see new things. I agree, guys. Experiences is what life is all about, right? All right, guys, y'all take care. If you're in Discord, I'll see you guys over there in a bit. The rest of y'all, hopefully we'll see you in Discord, but if not, I'll see you guys on Tuesday, 11 a.m. Central Standard Time. Take care, okay?